Hello and welcome. You're watching Money Time at Money9, and here is all the personal finance news that matters to your pocket and your life. Let us begin today with jobs. According to the payroll data of the retirement fund body, the EPFO, more than 17 lakh new jobs were created in the economy in April. In fact, almost 60% more jobs were created in the financial year 2022 as against 2021. The number of jobs created in FY22 was the highest in the previous 5 years. More than 1.22 crore jobs were created in FY 2022. So, we can say currently more jobs are being created in the country than in the pre-COVID period. Staying with jobs, the government announced on Tuesday that it will train over 1 lakh construction workers under the Nippon program. Nippon is a program run by the government to hone skills of construction workers. The government picks urban poor and city dwellers and hones their skills under the program. Union Minister Hardeep Puri said that the workers will be placed after the training process is completed. Around 14,000 workers will get placement in foreign countries like UAE and Saudi Arabia. In addition to that, the government will also cover them under the accidental insurance plan of 2 lakh rupees each for the next 3 years. The construction industry is poised to become the largest employer by 2022. Now, let's see how many people have subscribed to the two government-backed pension schemes. More than 1 crore people have joined pension schemes like NPS and APY in the last 1 year. More than 5.31 crore people have subscribed to both of these pension schemes till May 31, 2022. Almost 70% of subscribers have chosen APY over the NPS. If we talk only about NPS, then 14% subscribers are central government employees, while 35% are state government employees. Private sector employees make up 8% of the total and the rest are others. As for Atal Pension Yojana, there are more than 3 crore subscribers. These are mainly those who work in the unorganized sector and form a large chunk of employment in the country. If you are looking to buy your dream home and you need a home loan, then these are not happier days for you. Yet another lending institution has raised its lending interest rates. This time it is LIC Housing Finance. If you approach LIC Housing Finance for home loan, you will have to pay a higher rate of interest now. The mortgage lender has increased its prime lending rates by 0.6%. Now you will have to pay minimum rate of interest of 7.5% if you take home loans from the lender. Recently, many banks and housing finance companies have raised their home loan interest rates after the RBI had hiked the repo rate to 4.9% on June 8, 2022. And talking about interest rates, the private sector bank, the Yes Bank, has launched a unique type of fixed deposit where the rate of return will increase every time RBI increases the repo rate. Yes, you heard it right. The rate of return will be tied to the repo rate. If the RBI governor increases the repo rate, then you will earn higher interest on your FD. You can book the fixed deposit for a tenure of 1 year to less than 3 years. Currently, you get an interest of 6%. If the RBI increases the repo rate in the next meeting, then Yes Bank will revise and increase the interest rate by the same margin. There is one more FD on which the interest rate will fluctuate along with the repo rate. Its tenure is 18 months to less than 3 years. Currently, you get an interest rate of 6.5% on this FD. Now, if you think of buying a house, you mostly think about shelling out a huge sum of money for a flat in Mumbai and Delhi NCR. But you will be surprised to know that properties in Vizag, Bhubaneswar and Patna are more expensive considering the salaries of people. The cities of Vizag, Bhubaneswar and Patna are the most expensive cities in the list of top 10 most expensive cities in the country. In fact, Delhi NCR does not even feature in that list. If we talk about affordable housing, according to a report made by money control and real estate data analytic firm Liasis Foras, Bengaluru is the most affordable city in India, followed by Indore and Rajkot. All these while, you must have been thinking that properties in Delhi NCR, Mumbai and Bengaluru are the most expensive. But if we consider salaries of people, then these are not that costly. Now we move to some news on mutual funds. Capital markets regulator SEBI has again allowed mutual funds to invest in overseas markets. Earlier this year, the SEBI had banned mutual funds from investing in overseas markets because the mutual fund houses had breached the permissible overseas investment limit of $7 billion. But thanks to the recent correction in the markets, the valuation of stocks have reduced. As a result, the value of money invested in overseas stocks has fallen well below the $7 billion mark. Mutual fund houses are now free to invest your money in overseas markets. Edelweiss Mutual Fund is the most recent fund house to announce that its schemes that invest in foreign stocks are again open for subscription. And talking about investing in overseas stocks, if you think that by investing in foreign stocks like Google, Amazon, Microsoft, you can earn huge amounts of money, then you should know that people have not made money by investing in these stocks in the past 1 year. Even if you invest through mutual funds, then also international funds have given negative returns of 17% in the last 1 year. If we talk about other funds, then 72% of all the equity mutual fund schemes in India have given negative returns. Among these, investors have lost money mainly in small cap funds, equity-linked saving schemes, pharma and banking funds. Investors have got negative return of 13% in pharma stocks and of 7% in banking funds. Over the past 1 year, people haven't got good returns by investing in shares. Equity markets have seen sharp correction in the last few months due to liquidity tightening concerns, surge in crude oil prices and geopolitical tensions. But market participants have advised investors to stay on course and not cash in at a loss. And we end today's Money Time with what JP Morgan says about LIC share. JP Morgan, which is a global leader in financial services, has gone overweight on the stock with a target price of 840 rupees. In fact, the financial services firm has said that LIC's valuations are attractive. LIC is likely to reach the target price by March 2023. Further, the financial services firm has also said the market is mispricing LIC stock. The company is headed for a reasonable growth in FY23. That's all for today on Money Time at Money9. For more such videos like this, subscribe and keep watching Money9 English's YouTube channel. Do like and follow us on Facebook, Twitter and Instagram.